Imagine waking up one day and realizing that a single decision you made, clicking buy on the right stock at the right moment, became the turning point of your entire life. Not because you gambled, not because you got lucky, but because you understood something most people ignore. The stock market is one of the only places where an ordinary person can build extraordinary wealth. It doesn't matter who you are, how much money you start with, or what your background is. If you understand how to spot opportunities early, even tiny moves can lead to life-changing results over time. That's why some people treat the stock market like a second job, but the smart ones treat it like a tool, one that quietly works for them in the background, while they live their life. But here's the truth that no one tells you. Life doesn't change overnight. It changes slowly. Then suddenly, you invest a little, you learn a little, you take a small risk, you stay consistent, and one day you look back and realize you are no longer the same person. The market didn't just change your financial life, it changed your mindset, your patience, your discipline, the way you think about money, and the way you think about the future. Because the stock exchange isn't just a place where companies raise money, it's a place where individuals raise their standards. Now, of course, not every investment is safe. Not every stock will become a winner, and not every idea will pay off. But what matters is that opportunities exist, especially for people who are willing to study the trends, understand the risks, and think long-term instead of chasing shortcuts. And sometimes those opportunities are hiding in the places most investors overlook. Everyone focuses on big names like Apple, Tesla, Microsoft, but some of the most explosive stories in market history started as tiny companies trading for less than the price of a cup of coffee. That's why the world of low-priced stocks attracts so much attention, because while they come with higher risk, they also carry the potential energy that, when conditions are right, can turn into something massive. Now, before we talk about any stocks, understand this clearly. This video is for education only. Nothing here is financial advice or a recommendation to buy or sell anything. Penny stocks are risky, volatile, and unpredictable. They can go up fast, but they can also fall even faster. So research deeply, think carefully, and never invest money you can't afford to lose. With that said, let's talk about how to actually analyze low-priced stocks in a smart, responsible way. And then I'll break down a few companies trading under $2 that investors often study because of their sectors, growth potential, or turnaround plans. When you look at a stock under $2, the first thing people usually notice is the price. But the price means nothing without context. A $1.50 stock can be a dying company, or it can be a young company in a growing industry. So instead of focusing on price, smart investors focus on three things: the story, the numbers, and the probability of survival. The story tells you what the company is trying to build. The numbers tell you if the company is actually making progress. And the probability of survival tells you whether it can stay alive long enough to grow. Some of the most interesting companies under $2 fall into industries like biotech, renewable energy, mining, technology, and digital platforms, because these sectors often involve innovation, patents, new discoveries, or long-term contracts. That doesn't guarantee success, but it does create interesting scenarios where small companies can experience big increases if they hit the right milestone. Again, the potential, not promise. Now let's talk about a few companies under $2 that often show up in research discussions because of their sectors or developments. These are educational examples showing how investors evaluate low-priced companies, what they look for, and why certain industries attract attention. The first type of penny stock people study is in technologist micro-cap tech companies trying to solve niche problems with software, cloud tools, or AI solutions. One example of this category is companies developing cloud security tools or AI-driven analytics. These businesses may not be huge yet, but they operate in a growing industry. What investors look for is whether the company has paying customers, recurring revenue, and a scalable product, not just promises. The difference between a good tiny tech company and a failing one is very simple. Does it solve a real problem? If the answer is yes, then even a company under $2 can grow over time if it signs new contracts or licenses its technology. The second category is biotech. This area is high risk but high potential because a single FDA approval, trial success, or licensing deal can push a stock dramatically. Companies under $2 in biotech often have promising clinical trials, research partnerships, or unique therapies in development. What people look for here is not revenue, because many biotech startups don't have revenue yet, but the pipeline. How many trials are in progress? How advanced are they? Does the company have cash to continue research? These questions matter more than the stock price itself. The third category is clean energy and renewables. These companies are involved in solar, hydrogen, battery technology, or carbon reduction solutions. Some of them trade under $2 because they are early stage or because the sector is still developing. Investors interested in this category examine government policies, long-term contracts, partnerships, and technology patents. If a company can secure even one large contract, it can change its entire financial trajectory. Another category is mining and natural resources. Some companies under $2 specialize in lithium, copper, nickel, or rare earth elements materials needed for EVs, electronics, and batteries. The value here depends on how rich the company's land assets are, what stage their exploration is in, and whether they have agreements with larger partners. Mining stocks can rise when commodity prices increase or when new discoveries are announced. There are also digital service companies platforms offering streaming, communication tools, freelance marketplaces, or fintech solutions. These companies may trade under $2 due to competition, growing expenses, or early development stages. What researchers look for is user growth, revenue per user, and whether the company has a path to profitability. Examples of educational candidates. Investors often research under $2 include companies like SiriusXM, Siri for media subscriptions, Zomedica Zom in veterinary tech, Genius Brands News in children's entertainment, Sundial Growers, SNDL for cannabis products, Vinco Ventures, BBIG in digital media, or Ideanomics IDEX in EV services. These companies appear frequently in penny stock discussions because of their sectors, partnerships, or speculative potential. But each also comes with risks, challenges, and volatility. Some may grow, others may fall. The key is understanding why the stock is priced low, what the company is building, and whether the fundamentals support the story. When analyzing any stock under $2, the most important thing is staying realistic. You don't need every investment to explode. You don't need every idea to become 10x. Sometimes all you need is one good decision, one smart choice, one well-researched opportunity that aligns with your long-term mindset. Because the truth is, wealth isn't built by chasing hype, it's built by understanding risks, managing emotions, studying companies carefully, and being patient while others panic. If you want investing to change your life, you have to treat it seriously. Learn continuously. Improve your strategy. Study the companies, not just the charts. Look for innovation, not noise. And remember that the market doesn't reward the quickest, it rewards the most disciplined. That's how you turn a low-price stock into a long-term lesson, and sometimes into a life-changing outcome. So as you explore the world of penny stocks, stay curious, stay cautious, and stay committed to learning. The future is built by those who prepare for it today. And sometimes, that preparation starts with just one decision, one small investment, not to change your life overnight, but to start shaping the life you want for tomorrow.